Hello and welcome to the condominium home market report in the Seattle area for July 2025. Wow, guys, it has been an interesting run. I have done more condo sales this year than I think I have in any other spring. There's a lot going on that I want to share with you. And it's, again, just very interesting, a little bit harder to navigate than some of what we've seen in the past. So buckle up, we'll go in and take a look at the data, and I'll share my thoughts on how that is going to trend in the future, as well as how it may be affecting you now. So what we have on the market here is previously owned resale condo data for Seattle, Bellevue, King County, and the Everett market up in Snohomish County. Now, as you can see, we're looking at median home sale prices, and things are a little bit choppy. We've got a lot of up and down motion here, which typically when we see that much chop, it tends to be because there's just not a lot of data. It's not necessarily indicating a trend, but if we look at homes for sale, we've got 99 in Everett, we've got 900 in Seattle. So we should expect the Seattle data to be smoother overall, which is this black line here that is pretty flat, as compared to the smaller markets where we're going to see more chop. So to adjust for that, we can try looking at the data smoothed out over a longer period of time. This is 3 months, so we'll see if that gives us a little bit easier time spotting trends rather than just up and down variations in the data. So now we're looking at median home sale prices, and Bellevue, of course, leads the way. The median home price for condos, resale condos in Bellevue, is $745,000, which is actually down 2% from where we were year over year last time, and even lower. We hit our peak during the spring of 2022, the last big year of the COVID market, where median home prices were $777,000. Now we're down at $745,000 in Bellevue. Now looking at the Seattle market, which is this black line, it's a little bit hard to see. Median home price here for condos is $520,000, up 4% year over year, and compared to that peak spring market over here, we had in Seattle, we had 500,000, we hit 510, and again, now we're at 505. So we're just around the same place that we were in the COVID years. Now remember, during COVID, the condo market, especially in downtown Seattle, was very hard hit. People were fleeing the convenient urban centers and moving out into the exo suburbs like Carnation and Duval, Monroe, and now they're moving back in somewhat, but there's tons and tons of new construction condos. There are high rises. I think right before COVID, I heard that Seattle had more cranes, construction high-rise building cranes, than any other city in the world. And so all of those buildings continue to be built, but then were empty. And so those are continuing to be sold. A lot of foreign investors were negotiating low cash prices to pick those up at some discounts, and the Seattle downtown condo market really suffered as a result. So unlike the single family house market, the condo market has been quite different. We also have a lot of new construction homes that are being called condos. They're like little cottages in the backyard, detached accessory dwelling units, or DADUs. And so that's why I am excluding new construction data from this. I'm trying to help folks here who may have bought a condo, been living in their condo, thinking about selling a condo, see what the price trend is for them and not for the builders. So overall, the condo market has been pretty flat price-wise. We are seeing some variation. Not everybody has had appreciation over the last couple years, but the strongest resale market actually has been in Seattle, where we are up 4% year over year. Seattle probably also has some of the largest number of condominiums, both apartment style and townhouse style, and even single family homes that are detached but not on a large lot can be classified as condominiums because they don't have enough lot to be considered a single family home based on the lot size. So let's take a look at inventory and what's on the market. What's the competition? How many homes do buyers have to choose from? And we can see, wow, there is more inventory now than there has been for the last couple of years by far, and that seems to be carrying across all of the markets. We're up 53% in King County, 37% in Seattle, and up 97% over where we were last year in the Everett market, 121% in the Bellevue market. So even though these lines are small, the data over here is telling us that we are seeing quite a bit more inventory in these markets, which means there's a lot of homes for buyers to choose from. And if you are a buyer, you can have your pick of the litter a little bit more. It's not quite the crush that it was due to limited inventory in past years. For the past couple years, we've been talking a lot about the change in interest rates. Since the second half of 2022, interest rates were higher. Everyone had just refinanced if they were going to refinance during COVID when interest rates were low. Everyone had just sold if they were going to sold during COVID when home prices were high. And so a lot of the people for the last couple of years did not want to move. It was going to be more expensive to move into a higher interest rate property. But of course, eventually everybody has to move on with their life. You can't time everything around, what Trump is doing in office or, what's going on in the economy. You have to sometimes say, hey, I'm getting married. I don't want to live in a condo. I want to live in a house. We need more space, or whatever the case may be. So life is moving on and inventory is coming back into the condo market across the board. Now we just looked at homes for sale. Now we're looking for closings. This is how many transactions have actually taken place. And this looks pretty on par with where we have been in the past. So maybe not as huge a demand for buyers. I am certainly seeing a lot more canceled and expired listings where people, let's say they tested the market, they put their property on the market, couldn't get the price that they wanted, and then pulled the property back off, decided not to sell. We're going to keep this. We're just going to keep living here. We're going to rent here, but we are not going to sell after all because we can't get the money we want and we don't have to sell. How strong is the condo market overall? This has been a really big topic of conversation in my office over the last couple of months this spring. We were being told and coached, looking at the statistics, that you should help your sellers come to the understanding that they may be on the market for 5 months. It's not the type of thing where you just need to keep dropping your price, but nor is it the type of thing where you should expect to sell in that first week on the market. The condominium market is quite different than the single family homes market. Like I mentioned, have had a lot of condo deals going on this spring. And one of the biggest issues that I'm seeing across the board is weak homeowners associations. So if you are in a condo right now, get a hold of your board budget, your board meeting minutes, find out what's going on. There should be a reserve study. So you want to find out how much money you have in the bank to address needed repairs. And the homeowners associations actually commission a report. It's required by Washington law to show, in order to maintain all of your facility, you need to have $1 million in the bank, let's say. Replace the fences, replace the roofs, wash the siding, restripe the asphalt, replace the light bulbs, right? Everything that needs to get done has a cost associated with it. The board may or may not choose to do all of those things in the timeline afforded by the schedule. But if you're choosing not to save, we want everyone to know that's the case. Anyway, typically what we see, it's very rare to see a 100% fully funded homeowners association. I've never seen that. But it's also very rare to see a homeowners association that has saved even half of what these reports recommend. If they have saved 30% or less of what these reports recommend, then they are labeled as having a high risk for a special assessment. One of the condos I looked at last week had a $50,000 per unit special assessment. We're seeing a lot of places with less than 20% of the recommended reserve balance. We're seeing places that have 0% reserves. Any money that comes in They go to fix the biggest roof that has the biggest hole in it, and then they save up more money, and then they spend it all fixing the next roof. So a lot of homeowners associations are really struggling right now with this type of concern, which makes buyers cautious. One of the reasons that people are often buying condos is for affordability. They desire to have a starter home or downsize into something with a lower cost of living. And the new buyers do not want to be taking on these huge financial burdens and liabilities from sellers. So oftentimes sellers find themselves paying for those types of assessments on their way out the door. If something is in place, they've got to write a check for $50,000 from their closing proceeds to pay off those big assessments so that the buyer is at least coming in even. The other thing that tends to happen is that the homeowners association dues go up. I had been telling people a couple years ago, expect the dues to be $300 to $500 per month. What I'm seeing now is if they're $300 a month, then the reserve, the HOA board, is not really saving enough to be able to handle its plant expenses. And so that's often the sign of a weaker HOA that's going to have some sort of assessment down the road. I almost prefer to see a $500, $600, $700 HOA payment because it means they are actually saving toward those cash reserves. They are addressing the needs of the property. I would still say I expect $500 as about the average or the normal amount that it should be. But again, a lot of these buildings are having to pay more in order to make up for lost time with their property reserve savings accounts. So when we're running comps, when we're buying, when we're selling, a really important component of determining the value of the property is the strength of the HOA. So make sure if you're a homeowner in a condominium, you know what's going on in there and that it's being managed responsibly, not just for the people that live there now, but for the people who will be coming in as buyers. Banks have also cracked down on this. It's not as easy to get a loan on a condo, especially a condo that has deferred maintenance or poor HOA reserves. So it really does behoove you as a condominium owner to make sure that the board is handling their business. During the winter and spring, we had the election, we had the inauguration, we had the tariff scares, the stock market went down. So it's really been kind of a difficult and scary spring. A lot of people were kind of stuck, frozen, didn't know what to do. And that is kind of reflective here of what we're seeing of the days on market going up during that time. Once we hit the spring market and the tariff situation kind of normalized, we did see this start to come down. And now we're looking at an average between median of 2 to 3 weeks on market. And so that's pretty healthy, very much a seller's market, just not compared to the rest of Seattle, but compared to the rest of the world, this would be considered a seller's market. We don't get quite as quick of a feedback cycle, but you should know if you see your condo as a seller or you as a buyer have your condo sitting on the market for 4 months, 5 months, 6 months, that's not necessarily normal or expected. And it's an indication that there's a mismatch between what you're offering the market in terms of the price, the quality, the marketing. That's what you can control as the seller, and how buyers are responding to that. Do they say, yes, we're excited to buy this and pay for it? Or are they saying, no, we're not touring your home, we're not making an offer after we tour? As far as pricing, here the percentage of the list price is, we're seeing homes sell between 98 and 100% of list price. And then in terms of the original price, suggesting there could be an original price, and if the home doesn't sell, we might lower the price to attract more interest. And so is that happening? It looks like the percentage of price is 97 to 98% here, suggesting that a lot of homes are having a price drop and then they're selling for close to the amount that they dropped the price to. Some homes have had multiple price drops, okay? So this is just telling us that it's not quite, everyone's not getting their full price offer for their home. It does not mean that you should price high with the expectation of negotiating. I always think that having your high price and sitting on the market for a long time is not a great strategy. The longer you're on the market, the more people say, what's wrong with this property? It's like the restaurant where there's nobody eating inside. What's wrong with this restaurant, right? It's much more mentally, emotionally appealing to feel like other people want what you want. Other people are willing to pay what you're willing to pay. It validates your choice. It's that herd mentality. And so overpricing, sitting on the market, not selling, does not feed into that in a way that's helpful for sellers. How many showings do you need? On average, less than 6 or 7. So that means that we're not having tons of people come through the property. And this is not necessarily showing, open house visitors and that type of thing. This is focusing on how many times the lockbox is opened by realtors showing the property. So you don't need a ton of people to come. You just need the right people to come. Usually condo buyers are limited by budget. They may be limited by mobility. They need to be able to get up the stairs. Is there an elevator? Not every condo is right for every person. And they may be doing some screening and vetting. I personally, when I work with condo buyers, I always say, let's go out and look at 10 just so we can see what's out there and what's on the market. But I also spend a good deal of time vetting the HOA. And after we're serious, we've been on the market for a while and we kind of know what's out there, people get tired. They don't necessarily want to look at 10 condos and say, half of these have a bad homeowners association. I had clients looking in Kent, south of Seattle, where we were going to go out for a tour one day. We had chosen 7 properties that we liked, and 7 out of 7 of those had some indication of problems in the homeowners association. Low reserve funds, special assessment that just happened, special assessment coming up, all indications that they did not have a great financial plan in there. So at a certain point, before we went out and toured a home, I would just say, let me look at the homeowners association for you and see if it's a heartbreaker and they've, got all sorts of problems. That might be one that we would just want to eliminate from the tour schedule. So you might be getting toured or screened based on your homeowners association before you are even showing up to the front door. So that's another possibility here. So overall, again, looking at average sales prices now, I think the market has been pretty flat overall. We are up in Bellevue more than in other markets. We are up in Seattle as well. This is average now compared to median. We're down on the median. But we are overall not seeing huge growth. I did a regressive study for another client who wanted to consider having a condo as an investment property, and in her area, 1-bedroom condos over the last 20 years had appreciated an average of 2.97, just under 3% per year was the annual appreciation rate for 1-bedroom condos. This was in the Shoreline Lake Forest Park area. And so seeing this go up something like 4%, 7% is certainly very exciting. But if we look at the average over the long term, condos just don't tend to have as much price growth as single-family homes do. So it still can be a good investment, but it tends to be a little bit slower growing and more subject to economic stress because the buyers are a little bit typically less strong. A lot of first-time home buyers, a lot of seniors, a lot of people who don't have as much financial wherewithal to say, give me that mansion on the east side and I don't care what it costs, right? So anyway, hope this is helpful. I think it's great to buy condos, and I think it's really important when you do so to be careful what you're getting, because it's not just the 4 walls and I love your carpet in the living room. It's a lot more about going into business with the rest of the homeowners there and the management association who's handling the property. So thanks so much for watching. Emily Cressey with Keller Williams Greater Seattle. If you're thinking about buying or selling a condo or investing, I'd love to help you with that. Look me up at my website, homeproassociates.com, and I will talk with you soon. See you on the next video.